release of DeepSeek AI from a Chinese company should be a wake-up call for our industries that we need to be laser-focused on competing to win. So instead of spending billions and billions, you'll spend less and you'll come up with, hopefully, the same solution.
Today, the biggest ever stock loss in a single day in American history, and the company suffering the most is right here in the Bay Area. But could this possibly be a win-win situation?
What if I told you that NVIDIA, the AI chip powerhouse that dominated the market, just suffered the biggest single-day stock crash in U.S. history? Yes, you heard that right. $600 billion wiped out in a single trading session. So what caused this massive financial disaster? A new AI competitor from China, DeepSeek, is shaking up the industry with cutting-edge technology at a fraction of the cost. Investors are panicking. NVIDIA's dominance is being questioned, and the entire AI landscape might be changing faster than anyone expected. In this video, we'll break down exactly why NVIDIA's stock plunged, what DeepSeek is doing differently, and whether this signals a major shift in the AI industry. Let's get into it. NVIDIA's stock crash on January 27, 2025 wasn't just another bad day on Wall Street. It was a historic financial wipeout. The company lost 17% of its market value, equating to nearly $600 billion in a single day, marking the biggest one-day market cap loss in U.S. history. To put that in perspective, this loss was larger than the entire market value of companies like ExxonMobil, Costco, or Bank of America. So what exactly happened? Just last week, NVIDIA was the most valuable publicly traded company, surpassing even Apple and Microsoft. But then, the arrival of a Chinese AI startup named DeepSeek sent shockwaves through the market. Investors, fearing NVIDIA's dominance in AI hardware could be challenged, started selling off their shares rapidly. This triggered a domino effect, leading to the biggest single-day loss any U.S. company has ever experienced. The panic wasn't limited to NVIDIA. Other tech stocks also suffered, with Oracle, Broadcom, and Dell seeing drops of up to 17%. The NASDAQ index, which is heavy on tech stocks, also took a hit, falling 3.1% that day. Why was NVIDIA so vulnerable? The company had experienced an unprecedented rise in stock value, surging 239% in 2023 and another 171% in 24. As a result, many analysts had warned that NVIDIA's stock was in a bubble territory, meaning that any major disruption could lead to a sharp decline. And that's exactly what happened when DeepSeek entered the scene. The key question is, what makes DeepSeek such a threat to NVIDIA's market position? That's exactly what we'll cover next. NVIDIA's stock didn't just collapse out of nowhere, there was a trigger. That trigger was DeepSeek, a Chinese AI company that introduced a game-changing AI model. While NVIDIA has spent over $30 billion and more than a decade developing specialized AI chips, DeepSeek claimed to have built a competitive AI model for under $6 million, a fraction of NVIDIA's cost. So what makes DeepSeek such a big threat to NVIDIA's dominance? 1. DeepSeek's AI model is cheaper and more efficient. DeepSeek's AI model, known as R1, is a large language model that quickly gained attention for its cost efficiency and high performance. Unlike models from OpenAI or Google, which require expensive, high-end GPUs, DeepSeek's system reportedly functions using less computing power and more affordable hardware. This is a major disruption to NVIDIA's business model. NVIDIA makes billions selling GPUs to companies like Meta, Amazon, and OpenAI, which require vast amounts of computing power. If DeepSeek's approach proves scalable, it could reduce the demand for NVIDIA's high-end chips, forcing major AI players to rethink their dependency on NVIDIA. 2. DeepSeek's rapid market penetration. Within days of its release, DeepSeek's app became the most downloaded AI app on Apple's App Store in the US, surpassing ChatGPT. This surge in popularity showed that DeepSeek isn't just another startup. It's a serious competitor in the AI race. Even more concerning for NVIDIA, DeepSeek's model was trained on NVIDIA's own chips, specifically the H800 series. This suggests that while NVIDIA's hardware is still valuable, DeepSeek's ability to maximize efficiency at a lower cost has shaken investor confidence. 3. The political and market ramifications. The rise of DeepSeek comes at a time when US-China tensions over AI and semiconductor technology are at an all-time high. The US government has been imposing export restrictions on advanced AI chips to China, trying to limit the country's ability to develop cutting-edge AI systems. Despite these restrictions, DeepSeek managed to create a high-performing AI model in just 2 months. This raises several concerns. If China can produce competitive AI models without access to NVIDIA's best chips, does that mean the US is losing its edge in AI technology? Will major AI companies like Google, Microsoft, and OpenAI consider shifting toward cheaper AI alternatives, reducing their reliance on NVIDIA? How will investors react if NVIDIA's long-term market dominance starts to decline? The reality is, DeepSeek is proving that AI development doesn't have to be expensive, and that has sent a shockwave through NVIDIA's business model. But this isn't just about competition. Some analysts believe NVIDIA's stock crash is an overreaction. Could this actually be a buying opportunity? We'll break that down next. While NVIDIA's $600 billion market wipeout is historic, some experts believe the panic might be overblown. Yes, DeepSeek is a rising competitor, and yes, its cost-efficient AI model has raised questions about NVIDIA's dominance. But does that really mean NVIDIA is in long-term trouble? Let's take a closer look. 1. NVIDIA's AI infrastructure is still essential. Despite DeepSeek's impressive breakthrough, its AI model still relies on NVIDIA's GPUs. In fact, DeepSeek used NVIDIA's H800 chips to train its large language model. This means that while DeepSeek has found a way to optimize costs, it hasn't eliminated the need for NVIDIA's technology. Additionally, NVIDIA's high-end AI GPUs, like the H100 and the upcoming B100 series, remain the gold standard for companies like OpenAI, Google, Meta, and Amazon. These firms continue to invest billions into NVIDIA-powered AI systems. 2. AI demand is growing, not shrinking. One of the biggest fears driving the NVIDIA sell-off is that DeepSeek proves AI models don't need expensive chips, potentially reducing demand for NVIDIA's products. However, some analysts argue that this view is short-sighted. Even if DeepSeek's model is efficient, AI development as a whole is still expanding at an unprecedented rate. The AI industry is projected to grow into a multi-trillion-dollar market, and as AI applications become more advanced, demand for high-performance GPUs will likely increase, not decrease. Analysts at Cantor Fitzgerald stated that fears of peak spending on AI chips are unfounded. Instead, they predict that advancements in AI will lead to even more demand for compute power, not less. 3. Investors' emotional reaction versus market fundamentals. The stock market is known for overreacting to short-term news, and NVIDIA's crash may be an example of that. Over the past 2 years, NVIDIA's stock price skyrocketed, gaining over 480%, fueled by the AI boom. This massive growth meant that investors were already looking for a reason to take profits, and DeepSeek's announcement provided the perfect trigger. But does one competitor truly justify wiping out $600 billion in market value? Consider this. Just a few months ago, NVIDIA's stock surpassed Apple and Microsoft, making it the most valuable company in the world. Many experts warned that the stock was becoming overvalued, meaning a correction was inevitable. DeepSeek might have sparked the sell-off, but NVIDIA's crash was likely accelerated by market psychology rather than actual financial weakness. So what's next for NVIDIA? Despite this historic drop, NVIDIA is still a dominant force in AI hardware. The company remains highly profitable, and its future AI chips are expected to push performance even further. Many investors still consider NVIDIA a long-term winner in the AI space. That said, the market's reaction to DeepSeek proves that competition in AI is intensifying, and NVIDIA will have to adapt. Will the company continue to lead, or will new players like DeepSeek reshape the industry? Now, let's wrap this up with a final thought on what this event means for the future of AI and tech investing. NVIDIA's $600 billion crash is now the biggest single-day loss in U.S. stock market history. But was it a sign of NVIDIA's downfall, or just a market overreaction? On one hand, DeepSeek has proven that AI models can be built at a fraction of the cost, challenging the idea that companies must rely on NVIDIA's high-end GPUs. This raises questions about whether NVIDIA's dominance is sustainable in the long run. On the other hand, NVIDIA's technology is still essential for AI development, and demand for AI computing power continues to grow. While investors panicked, some analysts believe this drop could be a temporary setback rather than a long-term trend. One thing is clear: the AI race is more competitive than ever. As new players like DeepSeek emerge, the industry is shifting, and we are witnessing the next phase of the AI revolution. So what do you think? Is this just a short-term panic, or is DeepSeek a real game changer? Let me know your thoughts in the comments. And if you found this analysis valuable, make sure to like, share, and subscribe for more deep dives into the world of AI and tech. Thanks for watching, and I'll see you in the next one.